Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into the third quarter earnings report of Phillips 66, a leading integrated downstream energy provider. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Phillips 66 has just released their Q3 2025 earnings, and there's a lot to unpack, from their operational achievements to strategic acquisitions.
Revenue and profitability overview. Let's start with the financials. Phillips 66 reported third quarter earnings of $133 million, or 32 cents per share. However, their adjusted earnings were significantly higher at $1.0 billion, translating to an adjusted EPS of $2.52. This beats the analyst forecast of 207 cents. John, what does this tell us about the company's performance?
It's a strong performance indeed. The adjusted earnings reflect the company's ability to manage its operations efficiently, despite the reported earnings being lower due to special items like accelerated depreciation. The adjusted EPS beating the forecast by a substantial margin indicates robust underlying business operations.
Operational efficiencies and strategic moves. Phillips 66 operated at 99% capacity utilization in their refining segment, with an 86% clean product yield. They also completed the acquisition of the remaining 50% interest in WRB Refining LP. How do these operational metrics and strategic moves position the company for the future?
The high capacity utilization and clean product yield demonstrate Phillips 66's operational efficiency. The acquisition of WRB Refining LP is a strategic move to simplify their portfolio and enhance margin capture, strengthening their position in the Central Corridor. These factors collectively support their long-term strategy and operational excellence.
Cash flow and capital management. On the cash flow front, Phillips 66 generated $1.2 billion in net operating cash flow, or $1.9 billion excluding working capital. They also returned $751 million to shareholders. John, how does this reflect on their financial health and capital management strategy?
These figures highlight Phillips 66's strong cash generation capabilities and disciplined capital management. The substantial cash flow, even after excluding working capital, allows them to return significant capital to shareholders, reinforcing their commitment to maximizing shareholder returns while maintaining financial flexibility.
Future outlook and strategic initiatives. Looking ahead, Phillips 66 has announced an open season for the Western Gateway Pipeline and advanced their NGL strategy with Dos Picos II. They're also progressing on major chemicals projects. What can investors expect from these initiatives?
These initiatives are pivotal for Phillips 66's growth trajectory. The Western Gateway Pipeline will enhance their logistics capabilities, while the operationalization of Dos Picos II strengthens their NGL strategy. The ongoing chemicals projects, expected to start up in the next couple of years, will further diversify their revenue streams and support long-term growth.
Key takeaways. In summary, Phillips 66 has delivered a strong third quarter performance with an adjusted EPS of $2.52, beating expectations. Their operational efficiencies, strategic acquisitions, and robust cash flow position them well for future growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Phillips 66's impressive results.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Phillips 66's performance in the comments below.